Hey everybody, this is Jose Blasco here. We are about to get started with the session. As always, quick sound check, if that's okay. A quick message on the chat box. Quick hello, for example, would confirm that you hear my voice, and therefore we are ready to get started. So that's what I would really appreciate very much. As we begin, a quick hello on the chat box. That's what I'm looking for. Please go ahead and type it in. That way we can just begin on time. Thank you so much, guys. We got just a few seconds to go. By the way, I will turn on the video stream. So I'll put myself here in the bottom right corner, as always. How are you, everyone? Wonderful to have you in the session, and thank you for confirming. All is good. Wonderful, Joe. How are you? So we are live, everybody. Welcome to the session. Today is March 15, 2021. Futures now, that's the plan. We're going to be looking at the markets from an intraday point of view, active trading, lower time frames, multiple markets, since futures allow to be exposed to really everything, isn't it? We got the commodities, metals, we got treasuries, we got equity indices, all sort of things, currency futures, so many things. And the idea is to look for those market opportunities that meet our rules, and when that's the case, we take action. And if that's not the case, we use patience. We have a professional approach to trading. We don't force the trades or bend the rules. We keep looking for opportunities because the markets are dynamic, especially in the lower time frames. You may look at the charts now and there is no opportunity. You may look again 5 minutes later and now there is an opportunity. Things, form as we speak. Therefore, we are ready to act, but again, with that discipline mindset. That probably is a valid introduction for the session. So I'm just going to highlight the disclaimer on the upper left part of the screen so you can read it carefully. Please read it carefully. This is important information. Trading involves risk, and all of you should be aware of that. So I am counting on you for you to read the disclaimer properly, okay? No skipping words. Very good. So with all of this said, agenda. So we start with a hello everyone. We just did. I want to remind you all that we are simulcasting. That means that depending on where you are connected to be able to watch the stream, you may end up having more or less latency compared to other attendees, other students, other traders, depending on where you are. Also in the world, because obviously depending on the propagation of the signal, if you wish, there may be more or less delays. So just keep that in mind. Be on top of the chat box if you have a question, or if I have a question and I am requiring you guys to give me some answer, please do it timely. So that way, video lags are not too bad as a problem. The plan for the session, as you know, is we are simulcasting, as I said, meaning that the whole session, the complete sessions run in our website, tradewithufos.com/live. And a shorter version of our sessions run in the public environments such as YouTube, Facebook, and so on. So we're going to be running the session. We're going to be looking to understand the market, review trades, trade management, looking for opportunities. And the moment we identify one trade, then we'll switch. When it comes to getting into trade number 2, we will switch to the private room exclusively. Okay. Also, this is an intraday session, meaning that normally we would not have trades to review because the trades are short duration. The trades could be 2 minutes, 5 minutes, 20 minutes, but then you are done. Is that making sense? So it's not like I'm going to review trades that we plan in other sessions because they were long over at this moment in time. Okay. Cool. So anyway, teamwork, everyone. Be ready to be engaged. Ask questions. Don't be shy. My job is to provide you with answers. Okay. I will have questions for you too. So work with me, guys. Teamwork. Let's work as a team. Okay. Very good. So we start the session looking at futures. And the first thing that we have is with the Euro contract, we have a confirmed climate alert to go long near sensible. So guys, let's not think too much about this. Let's load the Euro contract futures, the Euro futures contract, I should say, and we're going to start our analysis. Okay. Now, most of you are probably aware that last week was an important week in the world of futures trading. Why is that? Well, because the third Friday of the month, that's when most of the contracts expire. and therefore the prior week, typically, not always, but typically the prior week is when we find rollover taking place. Okay, so notice, if I look at the chart, notice how ugly the chart on the left looks like. Why is that? Well, it has a lot to do with the fact that this contract, the edge contract, may not be the right one to trade any longer. Okay, so again, of course, if you're trading futures for a while, you know that's the case. But let's say you are newer to trading and you don't want to make mistakes. I always recommend to use a website such as barchart.com. You can get into your currencies, you can get into your EuroFX in this case, and when you click on it, you will be able to have a view that shows you which contract is the one that is likely to be the most liquid. Here it's suggesting the M, okay? But again, you can always come here and look at the greatest open interest and volume and then confirm the M is the right letter. Notice it's not the H anymore. Now most of the volume is on the M, okay? And by the way, if you trade futures, most of the contracts expire every 3 months. I mean, it's not the case with commodities, which often it could be as close as every month. But for many of the futures markets, you have to remember this, HMUS, which again, when you're done with H, now we go for the M, isn't it? And then the U, and then the Z or the Z. Okay, so in other words, notice how I had the H. So what are we gonna do? We're gonna move from ECH to ECM21, and that will load the liquid version of the contract, the most liquid, I should say, because euro is liquid all the time, but the most liquid version of the contract, which is the one we want to trade. Okay, so again, for the ones of you who are veterans, this is obvious and common sense. For the ones of you trading futures for a limited amount of time, this is absolutely critical, because using the wrong contract would basically get you in trouble. On top of that, you would be trading the wrong price points. So if you were to be profitable, basically you just got lucky. Okay, so we want to make sure you are using the right contract. Okay, so with all that long explanation out there, so we want to look at the climate. We can see the climate is blue and thick, so the climate is confirmed. We are supposed to be a buyer because we have a statistical advantage being buyers, so we don't want to short the euro so far. And our reference point for an entry would be 1949. Okay, so 49 is the value I want to keep in mind. And when I look at 49 on the chart on the left, we got no UFO there, so no trade. When I look at 49 here, we do have a UFO. Okay, so here we do have a potential opportunity, and when we look at 49 here, again, no UFO. So the UFO we're going to be dealing with is this one right here. But having said that, I am going to suggest that we pass on the trade. Okay, and let me explain why, because again, you look at this value 49.3 and definitely it falls within the UFO, and you're going to be like, Jose, why did you just invalidate the trade? Well, here's why. Okay, here's why. And by the way, 8 minutes from now, I may revalidate the trade, and you will see why. But right now, I am going to invalidate the trade. Why? Because the current value of the euro is 55. So for me to meet an entry, I need the euro to fall all the way to here. And now I can take my entry expecting price to go up, right? Okay, well, that's fair. What's going to be the problem when price comes down and meet my entry? Well, when price comes down and meet my entry, guess what else is going to move down? Our reference value, the moving average, is going to move down. And because it's already 49, I am concerned it may be found under 48, which would be the location for my stop, isn't it? Just under 48 would be the location for my stop. So in other words, when price comes to the UFO may not be enveloping the EMA, which is one of our conditions for the trade to be valid. And therefore, so far, I'm just going to invalidate the trade. But guess what? 7 minutes from now, which is going to be 11:15 a.m. in New York. Okay, so 7 minutes from now, what's going to happen is that we're going to have an update on the EMA, because this is a 15-minute time frame. And when we have an update, since price has been going higher, I would anticipate the average to update and tick higher. So now it may be 1950, 1951, something like that, meaning that now if price falls, of course the EMA will fall, but now it fall, let's say it's going to be 51, so it may fall from 51 to 49, which is within our UFO. It's not going to be under 48, which is my concern now. Okay, so for the next few minutes, we are not taking any trade on the euro, but we are definitely coming back in a few minutes from now to recheck if that UFO is now enveloping the new updated EMA value found on the 15-minute time frame. So hopefully all of this was not too fast. I would definitely very much appreciate a quick confirmation coming from you guys, and even if you want to keep it very short, like, got you, Jose, something like that, that's good enough. You don't need to elaborate unless you have questions, but definitely please go ahead, work with me, guys, and give me a confirmation if that's okay, because that was a critical point. What else is happening here? Well, we got a sensible short flashing on gold. Okay, so here we go, it's flashing right here. So let's go ahead and open the gold workspace as well using the 15-minute time frame. Okay, and I'm going to go back to a bar chart to make sure I'm going to be using the right expiration date for metals. In this case, we're looking at gold. And with gold, we are supposed to be trading the J. Okay, we are supposed to be trading the J. Again, when looking at volume and open interest, indeed, this is the row with the greatest values. Okay, and it is indeed lining up with the J. Okay, so let me make sure my TradesStation is using J, which is not right now, it's using G. Okay, so I'm going to change it to GCJ21. And now, similar to what we just did on the euro, I am now reloading a whole set of charts with the right expiration letter. Okay, so saving this. Now, let's do some analysis. Okay, so we are in a climate which is confirmed to the downside, so we should be selling, we should be focusing on selling. 27.1 is our reference price for an entry, and 27.1 is lining up perfectly with that UFO. Okay, so you would think, okay, price is gonna come here, let's take the trade and write it down. Okay, and if it goes up, of course, we'll take a stop out. That's great. Okay, that's great. But unfortunately, I'm going to suggest that we pass on the trade. Why is that? Well, the reason why I'm going to suggest that we pass on the trade, it's because of risk management inconvenience. Let me explain what I mean by that. If you notice, the UFO here in the middle chart is lining up with the UFO from the left. 27 to 27.7 is indeed somewhere inside here. In other words, if I was to place my stop, let's say 27.8, 27.8 is going to be somewhere here. In other words, if this market comes here, okay, and stops me out, you still got plenty of unfilled orders left, and then after being stopped out, it may go your way, and you're going to be looking at it like, oh my God, what just happened here? Well, what happened is that if you were to do that, is that you ignored those unfilled orders. So what's the right way to avoid the stop out? Well, the right way to avoid the stop out is not to have your stop here in the middle of the UFO. It's to have the stop out above 29.8, which would be 29.9, which is more or less here, 29.9, somewhere there. Okay, so that would be the right way to approach it. Okay, to avoid a stop out. But what's the problem if you do that? Well, the problem if you do that is that this is your entry. The line on the top is your stop, and therefore the vertical distance between the two lines represents the risk. And we like to use safety targets, so notice that my safety target will be located all the way there. And again, even if you're right on the trade, and definitely probability is on your side if you were to take this trade, from a risk management point of view, for you to get to safety, you need gold to travel for a long while. Okay, so I'm gonna pass because it's not convenient from a risk management point of view. Okay, again, if let's say, and by the way, we are meeting entry right here right now. Okay, oh, by the way, everything has changed here because the UFO in the middle just went away. My friends, we have a trade. My friends, we have a trade. I'm not sure I'm gonna be ready for it because I need to find my target, isn't it? Let's say if I do this quickly. So the target will be located where the rival UFO is. So that's 12.3, okay? 17.12.3. So 12.3, okay? And the entry would be 26.7. So 26.7 is right here. I'm just gonna do this very quick, guys. So bear with me. Stop 27.8, right there. Okay, I'm not sure why I'm getting this error message. So 27.8. So safety target is gonna be right here. Okay, and then we said final target was going to be 12 something. So let me adjust this, and then I'll go ahead and I will explain it. I think we said 12.8, if I'm not mistaken, right there. That will be the final target. So let's see if we're gonna get a feel still here or not. I mean, it touched the UFO, started falling, so hopefully it's gonna come back up a couple of ticks and we'll get a feel. But basically what we're doing is that since the climate is defined, okay, 4 out of 6, so we are still on time to take the climate is confirmed to the downside, so we are entering using that UFO, which is lining up with the reference value, which is 27, okay? So now it's falling already, so I'm not sure we're still gonna get the feel. It dropped by 7 ticks already, so we may miss it. We'll see. Anyway, the trade is valid, so we stick with it, okay? And if I was to zoom in, okay, so notice that this is our entry, this is our stop, an equal distance below, we have our safety target. So notice that as long as price comes here and it drops just 2-3 more ticks, that's it. We're gonna be back to safety. We cannot lose anymore. And now we are riding the move all the way to the final target located at 12.8. Okay, so this looks like a very beautiful trade. The problem is that I've just been a bit too slow. I got surprised really because I saw the very fat UFO on the middle screen earlier, and basically that was the reason to invalidate the trade. But next thing you know, that UFO went away. So now I have a neat setup for the trade to be taken. So in other words, I have the order in, haven't been filled, even though it already moved in our favor. So I'm just gonna stick with the plan. I'm not gonna chase price. I'm not gonna get emotional or angry because I may have missed the trade. We stick with the plan. The plan is stay with it until you either get filled or you don't. By the way, we just got an update 1 minute ago on the climate. Okay, actually close to 2 minutes ago. So 27 is the EMA. 27 is lining up very well with the UFO. We got 4 dots now, so 4 out of 6. So again, it's all valid for the trade to be taken. Notice that if I had been a bit quicker, we would have reached already the safety target right there. Okay, but I missed that entry. Having said that, the UFO is still on the screen, so the trade is still valid. If we have a bounce and price comes back to the UFO, we are still allowed to take it. Okay, so we're gonna stick with the plan on gold. That was a bit quick. Hopefully, I didn't lose you guys. Again, welcoming your feedback. Joe, I see some of your comments. I'm going there right now. Before I do that, I just want to take a quick look at the Euro futures because we said that we may validate the trade. Okay, so notice that now is more than 11.15. So what did just happen? Well, we had an update. Okay, we had an update on the climate. Unfortunately, our EMA that was 49 moved to 49.9, so not even 50. So again, I have the same concern I had before. If price comes down all the way to the UFO, we may see the EMA below 48, and that would again invalidate the trade. So basically, the problem we had is that the EMA kind of went flat. If you look at the EMA values, the current candle is 49.9. In the prior candle, it was 49.0. So, sorry for that, 49.0. So yeah, it did went up a little bit, but tiny. Okay, so no trade with the euro. We have exactly the same situation as before. So what I'm gonna do is postpone my decision to when we get to 11:30 in New York time, because at 11:30 the 15-minute time frame will give another update on that EMA. In the meantime, back to gold to see if we came back to the entry or not. We haven't yet. Good news, there is a green UFO. Hopefully, I mean, it's against the climate, so I don't expect that green UFO to do too much, at least based on the current climate. But hopefully it does enough to bring prices back up and we get our entry. such a shame that we missed it. Even though, again, when I say such a shame, is just to use, an expression from the English language. Make sure you don't feel bad about it. Missing trades is part of trading, just like taking a loss is part of trading, just like taking a profit is part of trading. So no need. Okay, here we go. We just got filled. Big move up from that green UFO. We got filled very quickly. So we are in a trade. Okay, good. So what are we gonna do now? Okay, so I'm just gonna move the chart here because I want to talk about trade management. Okay, so I want to discuss a time stop, okay, on the trade. So this is the candle where we got filled, okay? That candle is 11:20. We're gonna give ourselves the opportunity to be in this trade for 3 candles, meaning that it's gonna be candle number 2, candle number 3, okay? So if we surpass 11:24 and we get into the next candle, okay, after 11:24, if we haven't reached the safety target and it's already 11:24, we're gonna have to close this trade, which may be for a small loss or a small profit, unless we get stopped out all the way. And if we do reach the safety target before 11:24, then we're just gonna ride it, okay, and go with the flow to see if we get to that very far away target all the way at 1712.8. So far, we can see a bit of pressure from the climate, a bit of pressure from the UFO. We are 2 ticks away from hitting safety target. 1 tick away. Come on, market, be nice to us. Just a little extra push. We're gonna be out of risk, and then this will be, a nice one to continue riding. 1 tick, 1, 2, 3. Here we go. Come on, Mr. Gold, give us a bit of gold. 2 more ticks. Okay. Again, no changing the plan, no closing the trade manually, no getting emotional, just discipline, guys. Okay. And it's a normal thing that the markets fluctuate up and down, even though, of course, it's challenging. Look at that. Now it's going back to 120, now drop to 160. So again, it's certainly, if you keep watching, it's certainly the recipe to add some emotions. And this is when self-control, professional approach to trading, having a plan, having back-tested your plan, knowing what you got in your hands, joining the sessions, teaming up with other traders, so you are being kept accountable. All of those things are going to be very helpful to you. Okay, so we are, when looking at the time, we are basically 2 minutes and 10 seconds away from a time stop. Okay, so hopefully those 2 minutes left will allow for gold to reach 220, and we're going to be out of risk. And if not, we're going to have to close the trade manually in 2 minutes time. Okay, 1 tick. Come on, this time you have to hit it, Mr. Gold. Enough about teasing us. Well, I don't know, you guys, if you guys talk to the screen when you trade, what I do, may sound silly, but maybe it's one way to get out some of the emotions out of you. That's it. We just hit safety target. So we are out of risk in the trade, my friends. So no need for time stop any longer. And now we are just going to be applying our other trade management techniques. Okay. So let me explain the other trade management techniques that we're going to employ. First of all, we're going to measure the vertical distance from entry to stop, okay? And we're going to project this multiple times, okay? We're going to project this multiple times. So what's going to happen? 2 things may happen, okay? Well, actually, more than 2 things may happen. Gold comes back and stops us out. And if that's the case, we are breaking even because you took a profit with half of the size and you take a loss with half of the size. So you break even. Okay. So that's possibility number 1. Possibility number 2, in any of the charts, a new UFO may form anytime. And that, if that was the case, we would trail stop above that UFO. Okay. So we would start moving our stop, which is currently still located at 27.8. We're going to start moving it down following price. Okay. So that's another possibility for the trade. An option number 3 is that gold just goes, falls like the world is ending with no UFOs being formed, because basically all the buy orders in the market are canceled and is a free fall for gold. So no unfilled orders form. And if that's the case, we're going to use our too far, too fast trailing methodology, which means that if we hit that price point with no UFO, the stop will go here. If we then hit that price point, then the stop will go here. Okay, and we just keep trailing stop times the size of the UFO, because if you think about it, the vertical distance of those lines represent the vertical distance of the UFO which represent the volatility at the time of entry. Okay, the wider the UFOs, it means more volatility in the market. The narrower the UFOs, it means less volatility in the market. So you are giving your trade some opportunity to breathe, but not too much, because breathing, it's kind of like a hopeful, opportunity, and we don't like to rely on hope. Okay, so we have a mechanical rule on how to allow the market to kind of do its thing while we are going to be demanding with the trade. It's either you move our way or we're out. That's it. Okay, why? Because no UFOs form in that third case. So it would be too hopeful to rely only on the climate. While the climate is in your favor, it's only one component of the trade with no UFOs. Definitely, we don't want to hope. Okay, so just waiting there to see what's going to happen. And in the meantime, I believe I'm just going to answer Joe's question, and then this will be the time where we will disconnect from the public streams and just continue our trades in the private room. So Joe said, why not have your stop at the top of the red UFO on the 2 minute? Yes, I did answer that, isn't it, Joe? Because at that time it was inside of a UFO in another time frame, and then you would still have unfilled orders left at this price point. Okay, and therefore it will not be a good one. It's the recipe to be stopped out and then see price move your way. Okay, and we don't like that. Things changed from when I asked. Oh, okay, I'm reading your second question. Very good. So we are in sync, Joe. We are in sync. So all good, my friend. Very good, everybody. So let's continue with more trades and more plans. For the ones of you attending the sessions in the public channels, thank you for joining me today, guys. I will see you next time. And next time for me is going to be on Wednesday with options. You guys take care, my friends, okay, if you are in those public places, okay? So anyway, so we're gonna continue now with more trades. Of course, the process, guys, is gonna be the same. Okay, I'm just gonna go ahead